Feroze Azeez, who's the joint CEO at Anand Rathi Wealth, joins in with more perspective on the market. Feroze, how do you play a market which is every day changing as per the mood swings of the US action on Iran and the Middle East tension?
Good morning, Nisha. Good afternoon, in fact. I think, of course, if you have to play the market, that automatically implies that you're not an investor, you're a trader. If you're a trader, these are very beautiful times for an options trader, especially. Most of the people whom I know who do options trading for a living, who are very, very qualified, they've done courses on Black-Scholes pricing model and they understand first order and second order Greeks, are making the most amount of money at this point in time. So how do you play the volatility? You play the volatility by placing a Vega trade or a Theta trade on weekly derivatives. That's the place where you would be. If you have to be now, if I'm an options trader, which I do, of course, for the last 20 years, this would be one of my most attractive periods for the last 3 years. So basically a Vega trade which plays the volatility opinion that the volatility will eventually subside. That's a place where you make a lot of time value of money, which is called the Theta. Then coming from a cash market trader standpoint, of course, cash market traders, it's not the best place to be in because you're going to be playing the direction of a specific stock or an index. And that could change very rapidly depending on what news flow happens. So I would refrain from doing a lot of cash market trading. Of course, if you're doing that and that's what you're used to and you're not a derivative person and you've not done enough education on Black-Scholes pricing model, then you should have very strict stop losses on either side. But I personally think even in the short term, a 5-7% correction is the maximum correction we could see, which could last, even if things get deteriorated. I've been saying that the Hormuz Strait of Hormuz can't be locked and chock-a-block for all countries. People will negotiate, and that's what you were just playing. That how India has been successful in at least getting some of those tankers out from the same space, which other countries are finding it difficult.
Right.
But yeah, so that's where I'll stop.
Right,
My
Feroze,
monologue.
many points you mentioned there. And of course, a lot of that is also on the assumption that probably this war will not continue for too long. But what all is already baked into the market when it comes to the discomfort and the pressure on our economy because of this war tension really escalating for a longer period? And the second factor of inflation across various sectors when it comes to transportation or feedstock and various other ways of fuel usage, that really relating to then a probable RBI action. So how much of that is baked in, and prognosis that what is the kind of level or how much fall are you ascertaining?
Nisha, see, I'm not even predicting how long the war will go on. See, what happens is any event which lives a certain life stops giving shocks to the market. The Ukraine war and the Russia war was far more penalizing to capital markets initially. 18,500 down to 15,400. I remember I was in Europe. I woke up a little late because, and then I see markets almost down 8% that day, 7%. So we saw 18,500 down to 15,600 within a matter of just a couple of months. I think it was Feb 2022, Feb 22 and 23, March 22. So whenever a certain event lasts long enough, that stops impacting the capital market. Now, crude touched 120, right? At least the futures did, which I trade. So that was a day when it gave you a shock. Now it's above 100, you're still positive because anybody who wants to sell is not going to wait to stagger and sell. People stagger and invest. Sellers don't stagger and sell. So that's one human element you have to keep in mind. So if this war lasts 3-4 months, the impact on the capital market will come down. Of course, the impact on macroeconomic variables will go up marginally.
Right. So,
But where we are,
Feroz,
I would be very happy.
normalizing $100 of crude, that's getting baked in, is the sense that I'm getting. But one quick last question. Which are the areas of comfort where the valuations are looking good and good point of entry in the market right now?
Yeah, I think small caps are very attractive. I think there's an equilibrium between large, mid, and small. I'm saying that today, when you look at crude, you have 57 lakh crores of foreign exchange reserves. The average for the last 10 years is 38 lakh crores. Not that $100 is such a sweet spot to be in. But today, only 4.6% of your GDP is import of crude oil. It used to be 15% 15 years back. It was 6.2% in 2023, just 2 years back. So that's why our impact is lower. But there are some advantages. There's some silver lining in the dark cloud. Can the markets fall 5-7%? That they can do any point in time. We're just 9% down. But is it sure to go up? It is sure to go up. The question is, will it go down before it goes up? But no, the most pessimistic guy will tell you that by some point in time, maybe the most pessimistic guy could say 1.5 years, but the market have to re-establish peak because the earnings have gone up by about 19-20% over the last 1.5 years just on Nifty.
Right. Feroze, it's always a pleasure to take your views on the market, and small cap is now looking attractive, is what you said. Thank you so much for joining us on NDTV Profit. Really appreciate your time.